a net worth of $1 million through property investment. A lot of people would feel this is beyond them. However, in this video, I'm going to run through a property portfolio scenario just to show how close and obtainable it is for a lot of people. Hi there, thanks for joining me in this video. My name's Tim. I'm a property investment advisor and a property investment educator. Now, when I first started investing, I did a lot of research and I read a lot of books just to educate myself, obviously, around what property investment looked like. And what I found was that there was a lot of people out there spruiking or talking up how many properties they owned, and you know, there were a large number of properties. And for me, it was a little bit off-putting because I really didn't want to have to run out and buy 100 properties to make some money out of property investment. So I'm going to run through in this video, I'm going to run through a scenario just to show you that you don't have to have a huge portfolio of properties to make it work. And in fact, they can be really reasonably priced properties and you don't need a lot of them. What it does show is that it is a buy and hold strategy. So you need to have some level of patience, if you like. It's not a make it happen overnight strategy. But again, if you're willing to just hold and wait, hold on to properties and wait for some period of time for the capital gain to be realised, then this really shows you how obtainable $1 million worth of net worth is. Okay, so let's look at the rate of acquisition. So we're going to acquire 4 properties. Every property or each property will be valued at $400,000. First one will be purchased obviously in year 1, second property in year 2, third property in year 3, and then the fourth property in year 5. So we've acquired 4 properties and we're going to hold those properties for 12 years. So that's from the date or the year of the first purchase. So 4 properties held for 12 years. We're going to assume an average annual capital growth rate of 6%. Now, you can obviously do your own research, but the data I've looked at suggests that we've actually achieved greater than 6%. So we'll go with 6% for this exercise. So at the end of that 12 years, based on that average annual capital growth rate of 6%, the value of the portfolio would be $2,880,000. Okay, so we've seen the value of the properties and the value of the portfolio after 12 years. We're also going to assume that we acquired each property using raising debt or raising a loan. So we've not only covered the purchase price, but also the purchase cost. So effectively it's been 105% loan against each property. So we can see there then that would equate to $420,000 of debt against each investment property. So again, we saw the value of the portfolio at $2,880,000. The value of the debt, and again, assuming that we haven't paid any of the investment debt down, so the debt remains as it was at the date of acquisition. So the value of the debt would be $1,680,000. Now, to calculate the net worth, we simply subtract the debt from the value of the portfolio. So we saw the value of the portfolio at $2,880,000 and the value of the debt at $1,680,000. So the difference being $1,200,000. So that would be the value of the net worth of that portfolio based on those factors that we looked at earlier after that 12 years of holding that portfolio. So 1.2 million worth of net worth. So we're going to assume also too that we've acquired quality properties in good locations. As responsible investors, we should be doing our research to make sure that we are actually buying properties that will increase in value over time. So all that being said, we've looked at $400,000 properties, and for a lot of people starting out investing, $400,000 is a pretty achievable purchase price. Now, if you're going to acquire properties that were more expensive, it would probably take you less time. If you're buying properties that are less than $400,000, it might take you a bit longer. However, for 12 years, and again, that patience comes into it, it's a buy and hold strategy. However, it shows you that it can be achieved. So we don't have to be frightened off thinking again that we need to acquire multiple properties and acquire them very quickly to be able to achieve some level of net worth and something that's realistic and is actually substantial. So obviously that $1.2 million is tied up within our portfolio. So To realise that, we'd have to sell the portfolio, and in doing so, there's going to obviously pay the debt out, but on top of that, we'll most likely pay taxes, and also there'll be selling costs. However, even if that came down or left us with $1 million and we invested that at, say, 7%, that's still going to return to us $70,000 a year, and that money should then just stay there. We're not actually eating into that capital. We're just basically receiving that revenue off the interest that we're gaining from investing that $1 million. So there's many ways that we can play that. Obviously, it works differently and means different things to different people. However, the purpose of that exercise is to show that it is really not out of our reach. Again, at 400,000, you don't need to own many properties to make it work. 400,000, I think, for most people is obtainable and within their sights and within their comfort zone as well. I think it's important to cover that off. Also, that we need to feel comfortable. Again, it can be pretty frightening to think that you need to own 100 properties. What does that look like? How are you going to manage all that? How much? What's your loan structure going to look like? So 400, I think, for most people is pretty realistic and would fall within most people's idea of what they can manage and realistically feel comfortable with. Okay, so that exercise is all about capital growth. So what we need to also make sure, and you can check out some of my other videos around investment property cash flow, because we really need to make sure that not only we're acquiring good quality property in good areas, we also need to make sure that when we do acquire those properties, we can actually afford to hold on to them. So cash flow, I beg your pardon, is the lifeblood of any business. Certainly it applies to property investment as well. So we really need to make sure that not only are they quality properties, we also need to make sure that they're cash flowing to a point where we can afford them. And that way we'll be able to see out the journey. We'll be able to get to the finish line, hold those properties, and then realise that capital gain. So look, thanks again for joining me in this video, and all the best with your journey.